All right, so today we had CPI. We're gonna keep this one brief. Yesterday was like 45 minutes, but it actually cut off, so I was talking longer than that. I was literally ranting, but hey, listen. So, I was continuing my analysis on the monthly chart or the monthly weekly institutional chart that I use to study the interbank price delivery algorithm. All right. So let's just go ahead and continue on what I was talking about yesterday. We have our cast backward 20, 40, and 60 days. All right. The cast backward 20 days is going to be anything near term. So we note the most recent high and low in the past 20 days within the range that we're looking at. And we would need a full month to transpire from the first. So it's not like we wouldn't do December 1st because a full month hasn't transpired after that. So, anyways, most recent 20-day high, right? We have this buy side. This is short term and intermediate term, and you can see that from the 60-day. It's also let's see, near term as well. So I should have put that there, but oh wait, no, that's because okay, I see what I did. I did this morning, by the way. So this level of sell side here, that is our near term. Okay, so that low hasn't been tested. What do we see here? We see these clean lows, and of course we ran through them before we had our quarterly shift, these relative equal lows here. Now we know the most recent high, and we had this high here, and this high here. Now this high is past the 60 days. That's why it's just marked as a level of buy side, right? But within 60 days, this would be the most recent high. Well, no, not even that. See, there's really not, like, if you look here in the past 60 days, like this really would be the high here. But like this level of liquidity just makes more sense to me in the sense that like there's gonna be buy stops above here, and like ultimately this is slightly before the 60-day range, and of course we still ran it anyways, and we're using these ideas in correlation with like our higher time frame objective anyways. But the idea here, or like what I'm trying to point out, like what I'm doing in our cast backward, right? Near term, 20 days, short term, 40 days, and intermediate term, 60 days. That's our cast backward, okay? Now we do our cast forward and we see, where has price been going in the last 20 days. We just follow it, okay? Obviously, last 20 days, aggressive movement for those stops. Now, on our monthly chart, we already know we have those higher time frame liquidity levels, which I'll go over in a minute. But listen, I'm going to say right now, we are going to reach out. As I mentioned yesterday, high impact news drivers this week, okay? Now, what I'm expecting is the volatility from those news drivers, from those large high impact. I could show you guys again, but listen, because it actually didn't record in the first part, so we'll do it. But listen, high impact news drivers all week that are going to push towards these highs, towards these monthly highs. I already invalidated the idea, or the idea that this back here as an order block has already been invalidated. And just look at it, like it doesn't. For an order block, we wouldn't want it to trade past the 50% point of the order block. So from here to here, okay, the last up close before the down move, we're obviously way past that. You think price is going to come up here just to go all the way back down after we've seen aggressive movement to the upside? In other words, institutional sponsorship to the upside, pushing that towards this level of buy side? I don't think so. All right, but listen, we have to understand that in our cast forward, what we're really looking at is we know that price is going to form a new high or low, right? So the last 20 days, the most recent low would be here, okay? And then we have these lows back here. So you know what? I'm just going to mark these as a level of sell side right now, okay? And that'll just help us. So we'll put that here, okay? 40. And this is for our cast forward. So these are levels of sell side that are relevant. These are untested lows. And as I mentioned, our underlying bias as of now is bullish. Still expecting higher prices. Like there's no indication yet to expect lower prices. We have that level of buy side. That's the reason price is going up there. Really simple. I mean, it doesn't go much further than that. All right. So not much to say here. And before I forget, let me just show you guys, because like I said, it cut off yesterday. It's like I just ranted. But anyways, look, CPI, FOMC, core retail sales. Like, just I don't even know what most of these mean, but I'm going to say FOMC, CPI, right? These are very high impact news drivers, and we have them every single day of the week, like all the way up until Friday. Additionally, right, if you look at where the most recent quarterly shift happened, okay? From November 1st, let's like look back 3 months. So, or 3 trading months, okay? So from 60, 40, and 20 days, price was going lower, lower, and lower. And the last 20 days, price ran out those buy stops. Now, why is price trading up here? Because of these highs. When it trades above these highs, okay, we can expect a market structure shift, and the reason why is at that point there's no reason price will continue higher, and the reason for that, right, is because the algorithm is looking at this past data, okay, and it's trying to find where the majority of liquidity is based on where pending orders are. Now it doesn't know, where like your order is, or your buy stop, sell stop. It doesn't know where it is, but it can refer to past data and know that traders are going to trail their stops above an old high, because that's what traders do. That's just what people do in general, right? So what ICT is teaching is that these are the levels that the algorithm are going to refer to. And when we do that cast back, we can reasonably expect price to trade to those levels. But what we also notice is the market continuously making higher lows and not taking out sell side. That's how we know that we're in a buy program. Well, why is price continuing higher? What other reason can it be continuing higher? This back here. So I'm not going to keep ranting on that. We'll go and I'll of course do the monthly, weekly. It's like the same thing, right? It doesn't change every day. So honestly, kind of pointless to go over it, but I'm still going to go over it, because price does move a little bit. During the day or during the daily range, and you can see that candle start to move. So anyways, all right, here we are, S&P. So same idea here. The only difference is, like, if you look at NQ, these lows are relative, while ES is actually taking out sell side. So we see this in this form, we see these lows, aggressive run below it, these lows, aggressive run below it. Okay, and let me get it here. So near term sell side, okay, boom. Near term sell side taken, near term buy side taken. Okay. Buy side right here. Okay, and this is the same concept. Like, I don't even know, because first of all, we're in a sell program. Like, if we look past, we can obviously see that price is going lower. Like, anyone can see that, right? But if we go like within 60 days, where's that high, right? Like, we have this right here, but we can already see that was ran out. Price took those buy stops. This would actually be let me see, so that is approximately 46 to 66. So that's precisely 20 pips, right? False breakout, turtle soup. Okay, and then afterwards, after we had that, the reason I'm saying it's a turtle soup is 10 to 20 pips above this high, aggressive movement to the downside right afterwards, right? We know a turtle soup is a reversal pattern. So anyways, those get ran out. Those stops here. See a turtle soup, false break above an old high. Honestly, at this time, if you didn't know everything afterward, people could probably expect price to trade higher from here, right? But ultimately, we know that we wouldn't be expecting that, because this low has been ran out. Okay, this low has been ran out. This low has been ran out. This was an aggressive move lower. We know price is trading up here. Again, I explained this yesterday. Price trading to this order block. It's rebalancing this aggressive range lower. And it does that after creating this high and running that and then continuing lower. And we have to bear in mind, what are we looking at here? What is this look back and look forward? Well, we're looking at a IPDA data range, the interbank price delivery algorithm, and we're looking at a specific range of the past 60 days and the present 60 days moving forward. Okay, so anyways, near term sell side, that's the last 20 days. Boom. Okay, see it taken, and this low has also been noted, of course, but this was the closest one to the 20 days. So I could have noted that, I did, but obviously that's still untested. This low, untested. This low, untested, right? Same thing here. So we're really not, based on what I just explained, like, really the only difference here is that this didn't create relative equal lows. It ran those stops, while NQ created those relative equal lows. And then this is showing, like, it's essentially manipulation in the form of prices creating these relative equal lows. And this would obviously be viewed as a level of support, or people would expect that these clean lows, that prices, rejecting off of this, so it's going to continue higher and higher, and we're going to see an uptrend again. That's what most people would be expecting. But what we see here is we see on ES that price is actually running the sell side. Okay, we see that here. These sell stops get taken, and at the same time, this creates these relative lows. So that's all I have to say for that, at least for the daily chart. Let's go to the monthly and refine this, right? Monthly, okay? And this is for the S&P, right? So this would be our order block here. See right here? This should be our order block. Now we're above the halfway point of that. And bear in mind, this is a monthly candle, so, we can expect that candle to maybe even just like wicked above, right? But based on where we are now, you can see a willingness for price to trade here. And what I would ask myself if, I was trading this live, and even now, why is price going up here? I mean, we took these highs, but now, from this high, so that's like what did the high of this candle come in at? High of this candle came in at 4634. And so price has increased, so 4364 to 4702. Okay, above that. So that is not a turtle soup. It's way too aggressive, right? And obviously these are monthly candles. So why are these large institutions, right? Because it requires a insane amount of money in terms of like large funds and the liquidity that they're providing. There's a massive amount of liquidity that needs to be provided for the market to actually drive price up here. And there's now liquidity above these highs in the form of buy stops. So that's why I'm reasonably expecting price to go to that. And listen, I don't know the future, but just watch. I'm telling you, just watch. Okay, I've been pretty accurate on my predictions as of late. And man, I'm feeling a lot more fucking confident, dude. I'll say that shit. Alright, I'm feeling confident. Bro. Alright, sorry. I know it sounds corny, dude. I'm just so fucking like happy. Alright, like I'm really like starting to get this shit. Like I feel confident in what I'm saying and shit. So, anyways, alright. Listen, I won't keep ranting, but bullish for ES on the monthly. Bullish for, I mean, this is obvious. Like we've literally already ran out these highs. We still have like the actual wicks, but this alone trading above the bodies right here, okay, here and here, that alone means that liquidity here has been taken, because we know that this is a majority of the volume. Okay, now we have the wicks. Price is still going higher, still targeting these untested highs. Completely fine. Obviously this is a monthly chart. Okay, how about the weekly? Well, on the weekly, you can see we ran those, but we still have this high back here. Oh, price is getting pretty close to it, isn't it? Already getting there. A little bit different of a scenario for ES. Of course, ES moves a lot slower. Still the same expectation, right? The price moving from this high, like, let's see, what is this candle's high? 4634, 100 pips from this high. Okay, now we're expecting price to move here. Again, turtle soup, gonna be like 10, 20, 30. We place our stop like 50 pips above, so in reality, this is not a turtle soup, because with that logic in itself, above buy side or where the stops are, that's the kind of run we would be expecting. So that we're actually expecting that back here, and we're expecting price to actually take these stops and aggressively move lower. So it's no different. Bullish on the weekly, bullish on the weekly, right? Doesn't go much further than that. Let me go now to. Let's go to the higher time frame chart. And in fact, because this doesn't have like the institutional levels on it, let's see like where I've been at with this, okay? And of course, this is more for like the weekly range, right? But here's the levels I've been noting, even without my understanding of this. This looks like a duplicate here. It's probably from like a lower time frame. All right. But listen, same thing. I literally have those levels. Like I promise I haven't copied these. Like these levels are previous levels that I marked. And that's just because untested lows, untested highs. I don't know. Oh yeah. I mean, that was a weekly order block. I don't really need that. See, it's just clutter on the chart. Like there's different things I don't need. Untested high. Well, obviously it's not untested anymore. I'm gonna delete that. Sell side below these lows, sell side below these lows, level buy side obviously doesn't apply anymore. Gonna delete that too. Okay, untested high monthly. These obviously, these lightning bolts just indicate displacement to the upside. That's it. Large displacement to the upside. Why is price trading up here? All right, same concept. Doesn't go much further than that. These are levels I've been looking at on the daily for NQ, ES. All right, I've gone over these every day. Don't really need to go much further than that. I'm really just clearing this shit up. Like, I don't need that level buy side marked anymore. Clean lows. Untested low, weekly untested low. Okay. All right, let's look at the 4 hour. Let's actually look at today's price action specifically on the 4 hour, right? So here we are. Today was Tuesday. All right. This candle starts off Tuesday. Funny how this trades lower from the New York opening price. We'll look at that on a smaller time frame, but accumulation, manipulation, the false move, price seeming as if it's going to go lower, right? Boom. Continues to run the buy side. Another bullish day, price action. Same thing I was saying yesterday. Like, I'm bullish on price. Like, that's what we're expecting now. And it's most certain bullish until we get here, and then we can expect price to start rebalancing this range, because at that point liquidity has been exhausted. There's literally no other point of liquidity than this high. Okay, like there's no other level that price is going to refer to outside of that, like or at least not that I could frame, right? But we're looking in terms of where the liquidity is, and then right when it finally trades there, clean lows here. Isn't that interesting? Why is there clean lows here? Why is there clean lows here? Right? And sell side liquidity. Anyways, if we look at today's range, obviously we can see, hold on, give me one moment. Okay. So obviously you can see that this was moved aggressively. Okay, from here, now that moved lower. This is probably the result. That's 6 a.m. This could be some of the news drivers. When was that? Today, 8:30 a.m. Let's see. Oh, that's a chart. Okay, so it's 2:10. So yeah, this is more likely than not. This is a result of the news driver, and then price, of course, continues higher, and then we see that. So if you look at the candle, like if we were looking at the daily candle, okay, this would be the open. Trades lower, boom, higher, short retracement lower, closes out higher for the day. Another bullish day though. Okay, and let's go to, give me one moment. ES is anything different, right? No, it's a very much the same thing. I mean, this candle right here, hold on, let's compare it to ES, right? This obviously, we can see that there's more volume here, but it's the same thing, right? Very much the same thing. Let's go to the hour. Okay, we're going to now look at where we are currently in the weekly range. So give me one moment. Let's move price to 12 p.m. Okay, here we are, 12 a.m. All right, so first day, Monday, going higher, higher from this consolidation. We're expanding higher. Now, one thing I will say, I mentioned this yesterday, if price comes all the way up here, okay, gets really close, this untested high, then starts going lower, okay, I'm going to look for price to trade back to the order block before the expansion, because with consolidation go in hand with equilibrium, right? But additionally, order blocks form in a consolidation before the expansion. So I could reasonably expect if price just leaves that intact, it's gonna trade lower, sure, but it would only be trading here, and that would be the expectation until we start seeing a sell program and we see price consistently run lows, but we're not showing that. Okay, so anyways, weekly range, price going higher, bullish. Right? Why would I expect anything less here? Bullish. All right, so we have that framed. 1 hour, 4 hour, we looked at that. Let's go down to my very last chart, which is the lower time frame, where we look at the 15-minute. I do need to note today's highs and lows, so we'll do that as well. And let's do that real quick. So here we go, 12 a.m. All right, 12 a.m. Is this right? Is this at the right time? Yeah, it is. Okay, cool. Just making sure. All right, and look at this, 8:30. All right, 8:30. Boom. Therefore, the move after. Same thing. 8:30. What was that? 8:30. CPI. Also seems to, from this high to the point that I traded here, right? This was all traded to the upside. So it was inefficiently delivered. It's delivered on one side of the marketplace. Price seems to have traded back down here to actually rebalance that price range before continuing higher and using the volatility of the news driver to do that, right? So yeah, that's one of the first things. Let's note today's high and low. Let's do that here on the video. I'm gonna have to pull out my phone and talk to it. Give me 1 second. So I'm actually lazy as hell. I don't like to. I was like copying and pasting it, dude. It honestly sucks. I'm not gonna lie. Like to just note the time. It's just like a menial task. Some more efficient way to do it. I'm about to do it too. I'm about to tell Siri what time it formed and everything. Make sure you get that high right. It's actually right here. It needs the body. NQ. Yeah, it was here. Yeah, okay. Perfect. So give me 1 second here. I'm gonna pull out my phone and I'm gonna begin taking a note. Okay. No. All right. It's fucking depressing. All right. So it's just NASDAQ. So $16613.25, 6 p.m. $16405.25, 9:30 a.m. $4704.25, 9:15 p.m. $4662.25, 9:30 a.m. And just like that, have the daily high and low noted. So now I just literally watch. I'm gonna show you guys some magic here. I'm showing you guys like I have fucking viewers, dude. Bro, I'm just doing this shit because I want to. It's exciting, bro. Like I'm fucking getting shit out of it. I literally vocalize it and I fucking like pretty much do it, bro. Like I'm really predicting this shit out here right now, bro. Like ugh, you guys don't even know how excited I am. You guys, so funny. I have an audience of one, myself. All right. So, anyways, we noted that, and then look, dude. All right. Here we go. Boom. Of course, we're gonna add the icon. I don't know why it's a fucking bike. There we go. Another day higher. Journal entry. Okay. Oh, look, there's my samples of price action earlier, and also same thing I was noting. Right. This just literally says the reason why I chose that high. Same thing here. Just wanted to have those samples. There we go. High and low. Bro, look. This is fucking sauce. Look at this weekly high, weekly range high, the day it formed, the day the low formed. Just start doing this where, like, you can see. Look at this. This is just fucking sweet, bro. Higher, higher. Like, I'm literally looking at a visual representation of price creating new highs each day. So if I see this, like even just looking at this, right, in the last 4 days, I mean, obviously we have to use this with the range, and this will get better over time. But I'm literally pretty much getting a visual representation of that without like candles. I'm not even looking at the candles. So, anyways, I think that's pretty cool. But bro, that's fucking it. I'm gonna leave it at that, and I am going to get onto another video right now, and I'm gonna study some more shit, and I'm gonna keep fucking like deepening my understanding, dude, and like that's fucking it. It doesn't go much further than that. So yeah, peace.